So ayun, this was my first photo. Mukhang amateur, pero proud ako dyan. Hindi naman sa pagmamayabang, pero phone lang gamit yun. After college, napilitan ako mag-telemarketing. Pays well naman. Brutal nga lang yung hours. Taking portraits for me is special. Gusto ko man gawin siya professionally. Kailangan ko ng tools din. Kaya slowly nag-iipon ako para sa camera body. Pero mahal talaga. Di pa kasama yung lenses doon. Sa paningin ng bangko, yung pagiging telemarketer is not a stable job. So madalas yung loans ko talaga is nade-decline. No? May mga bills na kailangan bayaran para sa pamilya and dreams have to wait talaga siguro.
My friends say I'm compulsive na daw. Sometimes when I see a new bag, I just have to have it. I try to get loans as well kasi limited edition na by the time maa-afford ko. Maaga ko na nabibili pero panibagong problema naman. Almost na doble ang binabayaran ko sa interest. Madali kong nakahiram pero you know, ang hirap bayaran.
Binuksan po namin yung store 1989. Sumapat naman po sa aming mag-asawa. Napagtapos nga po namin si Junior at si May. Kilala po kami dito dati. Basta sabihin nyo lang po yung pangalang Aling Hedy at Mang Dado. Gusto ko nga pong nagbabantay ng tindahan dati kasi maraming nakakakwentuhan. Kasi po, simula nung nagbukas yung mall sa labasan, konti na lang yung dumadaan. Naisip po namin mag-expand ba. Nag-try po kaming lumapit sa bangko para sa karagdagan na kapital. Pero hindi daw po sapat yung kita namin eh. Hindi naman nawawala ng pag-asa. Baka sakali pa rin may tumanggap na iba.
And welcome to Finovation 2019. Real problems, real solutions. Please welcome our host for today, anchor and managing editor of the ABS-CBN News Channel, Miss Kathy Yang.
Hi everybody, how's everybody going this early morning? Looking like a real full house? Thank you for coming. And welcome to Finovation 2019, Real Problems and Real Solutions. I'm Kathy Yang and I'm your host for the day. It's great to see familiar faces. I came in here a bit early and to see new ones and meet new ones as well. Today, we're here to help find FinTech solutions together to ensure that no one gets duped again by predator lenders or rejected for a loan for, say, an honest-to-goodness, sari-sari store business. When I got invited here to host the event, one of the first things I did was Google what Finovation meant. It's the first time I've ever heard of it. Anyone heard of it before I did? Before you came here? Because it doesn't exist. Sure, I could hazard a guess. After all, the news stories and interviews I've done along the way, along the lines of financial innovation, but I later on learned that Finovation is an abbreviation created by the event organizers, ecompermo.com, that focuses on insurance and banking technologies and data services innovation initially. Ecompermo is the Philippines' largest financial marketplace and is part of C88, one of the region's largest fintech companies. So today, Ecompermo has brought together policymakers, financial institutions, and critical players, really a whole ecosystem in the fintech sector to encourage learning. That's what we're here for, to provoke the meaningful conversations and deliver substantive value for financially underserved Filipinos. Has anyone here tried ecompermo.com online? A raise of hands? Not from the company, but maybe from outside. But I have to be honest, I was curious. It's my first time to hear of it, so I did. I Googled it up, and I called up for an auto loan. Not that I want another car, but I mean an auto insurance. So I got an auto insurance quote on the website. So it actually asked for when my car was made, what model family it was, where it was registered, and whether I wanted acts of nature included in the quote. Then moments later, it sends me a list of top quotes, and out came nine matches. Then it asked me whether I wanted a comparison of any of the 9 and see which among them would make the best fit for insuring my car. So I did this over the weekend. And then 24 hours later, on the first business day, I get a call. Okay, so this works. But I told the gentleman on the other line, hindi pa po ako handa. Not yet ready to get that insurance on my car. So it does work. But I haven't fulfilled the transaction, but I just wanted to get a feel of what it was. So it's really access to digital FinTech services websites like this that didn't exist before and which are now addressing this critical need by all the Filipinos, including the underserved, to gain access to money. Along those lines, for today, we'll be dive deeping into the Philippine state of regulation and policies, very important, in empowering financial institutions to reach more of the underserved. And then get into some of the institutional concerns and challenges on digital innovation in separate roundtable conversations. We'll have 3 of that. After lunch, I will be facilitating the final one on regulators involved in the highest impact projects in the Philippines. And not to forget, there are raffle prizes towards the end of the day. And I have to emphasize that you must be around to claim your prize. I think that's fair, right? You gotta be around. So it's one more reason to stay for the rest of the day. So before we start, I'd like to call on the CEO and co-founder of eCompermo, Ms. Stephanie Chung, for her opening remarks.
Good morning, everyone. Honorable Governor Jokno, ladies and gentlemen. As a company, we've always believed that success is not simply measured through financial gains, but ultimately the significance that eCompermo brings to the country. I am talking about providing financial access to millions of financially underserved Filipinos. As a marketplace that has an average of 1.5 to 1.8 visitors per month, we have become the middlemen on the sidelines. Every day, we have 350 employees and counting, dedicating their lives to educating people about making the right financial choices, getting customers approved for their first credit cards or loans, letting the public buy insurance products online, building infrastructure to improve credit access for everyone. We feel the pain of our consumers. On the other hand, we can also relate to the issues of our partner institutions. But financial technology can only do so much, and we are not even close to achieving financial inclusion. There is a lot more to do. So we are collaborating with the banking and financial services sector, other industry stakeholders, policymakers, regulators, and even our competitors. This is just to resolve issues and find actionable solutions to the most pressing problems that serve as hindrances. This conference is a step towards that. For today's program, we will address some of these hurdles from the point of view of consumers, to industry challenges, to hearing about relevant regulator platforms and programs. We will also have best practice and case presentations on alternative credit scoring and digital onboarding. I trust that at the end of today's event, we will leave the hall with additional knowledge and confidence, knowing that we have a clearer and a more solid path towards greater financial inclusion. Welcome everyone to eCompermo's Finovation 2019. Thank you.
Thank you, Ms. Chung, and for letting us in on the transformative purpose of just giving Filipinos a sustainable financial access. Our keynote speaker's policy expertise and research contribution extend to various areas of public economics, such as the structure and scope of government, tax policies and reforms, public expenditure management analysis, fiscal decentralization, national budget, and public debt, among other topics. He is a staunch advocate of fostering the responsible use of FinTech as a priority agenda of the Bangko Sentral ng Pilipinas. In fact, in his first one-on-one interview with me when he was appointed to the post a couple of months ago, he highlighted the need to expedite financial inclusion and secure financial access for the 70% of Filipinos still unbanked or poorly served. So please welcome Bangko Sentral Governor Benjamin Diokno.
Thanks, Kathy. Ladies and gentlemen, good morning. Thank you for inviting me to share with you the BSP's key policy issuances and initiatives to promote financial inclusion in the Philippines and the regulatory framework on financial technology. This year's theme, Get All Pinoys Accepted, is aligned with the BSP's policy objective of building an inclusive financial system for the Filipinos. Through financial inclusion, we aim to cater to the unserved and underserved markets such as the low-income and marginalized micro, small, and medium enterprises, overseas Filipinos and other beneficiaries, agriculture and agrarian reform sectors, indigenous people, persons with disabilities, among others. We at the BSP recognize the significant role that the FinTech plays in driving the transformation of the traditional processes in the financial system through technology-driven innovation to unlock financial inclusion barriers. We aim to develop a digital finance ecosystem that supports the diverse needs of all users in a manner that is secure, sustainable, convenient, and affordable. To support this goal, the BSP established the National Retail Payment System, or NRPS, our flagship program for digital finance. NRPS is built on three core principles, namely interoperability, inclusiveness, and co-opetition. Through the NRPS, regulated institutions are required to adopt transparent and fair market pricing of electronic payments, transition from exclusive bilateral to multilateral clearinghouse agreements, and provide electronic fund transfer facilities in all available channels, among others. It is a critical platform that will establish an interoperable ecosystem, allowing seamless electronic fund transfers and payments between and among accounts. It aims to promote a cash-light economy and ultimately improve the country's economic competitiveness. The NRPS and the payments ecosystem that is envisioned to arise from it is positioned to be a platform for FinTech innovations. Industry players can utilize FinTech solutions and provide services within an organized, commercially viable, and efficient retail payment system. Advances in technology have also enabled the development of solutions that enhance market reach and expand delivery channels. Through technology, people from all walks of life, including those in unbanked and underserved markets, can have access to formal financial services like online payments, and fund transfers. We cannot discount the crucial role that FinTech companies play in this modern ecosystem. FinTech players are no competitors of our supervised financial institutions, but rather are strategic partners to bring about greater efficiencies in the delivery of financial services. Now, recognizing the benefits and opportunities from these technological innovations, the BSP aims to provide a regulatory environment that allows innovations to flourish, while at the same time ensuring a safe and sound financial system that is beneficial to the general public. The BSP's regulatory approach is shaped by three principles. One, we ensure that regulation is risk-based, proportionate, and fair. This means that regulation is calibrated according to the magnitude of risk identified in a given activity and not on the type of entity that delivers it. This approach promotes a level playing field and ensures that beneficial innovations are not hampered by unwarranted and excessive compliance requirements. Number two, we maintain active multi-stakeholder collaboration. This is necessary in view of the multiplicity of players and relationships among fintechs and varied financial sector players. It represents a whole of government approach, ensuring policy consistency and preventing regulatory arbitrage. Continuing engagement with industry players is also crucial to foster a shared understanding of risk, our financial inclusion goals, and market conduct expectations. Number three, we ensure consumer protection. By this, we mean innovations must work for the benefit of consumers, especially the most vulnerable ones and those availing of financial services for the first time. Regulations must ensure that issues such as transparency, product suitability, security, and confidentiality are made paramount considerations in the design and deployment of digital solutions. FinTech has immensely contributed to the enhancement of a financial consumer's experience by transforming the delivery of financial services from branch banking to online banking, paper-based money to electronic money, and face-to-face customer verification to technology-aided Know Your Customer process, among others. In addition, FinTech transcends geographical barriers and enhances transparency and reduces the cost of financial transactions. In line with this, the BSP has identified the responsible promotion of FinTech as a priority agenda. Thus, the establishment of a FinTech roadmap covering three key areas, namely collaborative engagements, commensurate regulations, and capacity building. By collaborative engagements, we mean maintenance of active multi-stakeholder collaboration. It represents a whole-of-government approach, ensuring policy consistency and preventing regulatory arbitrage. Continuing engagement with industry players is also crucial to foster a shared understanding of risk, our financial inclusion goals, and market conduct expectations. In crafting commensurate regulations, the BSP has implemented key policy changes espousing the principle of proportionality. This approach promotes a level playing field and ensures that beneficial innovations are not hampered by unwarranted and excessive compliance requirements. For capacity build-up, the BSP continues to provide training and learning opportunities to fast-track the development process of our people. to ensure that financial supervisors maintain the necessary knowledge, proficiency, and competence to keep pace with the fast-evolving innovations. We are also exploring RegTech and SubTech solutions, including the use of artificial intelligence, machine learning, cloud computing, and APIs to enhance the timeliness and quality of our risk-based decision-making. As part of the BSP's FinTech roadmap, I would like to share the BSP's test and learn approach, or the regulatory sandbox, as part of our supervisory toolkit in dealing with new and innovative technologies in the market. Through the so-called regulatory sandbox, pioneering solutions and technologies can be deployed in a live but controlled setting. I will not go into each of the steps, but on a very high level, our test and run approach has been proven to be useful in dealing with increasing digital innovations in the market and promoting development and innovation within the financial services industry. It provides an opportunity for innovators to connect to the banks and other players with clear authority from the regulators. Such an approach helps the regulators assess potential risk and accordingly decide how to regulate the new market if needed. Recent examples of entities which approached BSP and devoted time and resources to conduct controlled and calculated experiments of their products include, number one, a pioneering rural bank that engaged a cloud service provider for its core banking system. Two, a foreign bank which partnered with an electronic money issuer to offer its mobile-based deposit product. And third, a universal bank which explores potential use cases of a tokenized cash. And number four, a universal bank which utilizes the blockchain platform to push its financial inclusion initiatives. Let me quickly walk you through the 5 key steps in the BSP's test and learn approach. The first step is to allow for market to develop and innovations to take place. After engaging with FinTech players, the BSP determines if the proposed innovation presents major regulatory concerns. This is where the BSP checks the eligibility requirements such as soundness and feasibility of the business model, whether the proposed solution is innovative and not covered by existing regulations, and the proponent demonstrates sound track record, as well as resources capability to successfully launch the pilot. The next step is to proceed with flexibility, yet with caution. During this phase, the BSP set certain limits or parameters or safeguards before FinTech players fully market their products and services. We allow these pilot projects to run with clear parameters, that is, specific test time periods, localized markets, or geography and limited users. Likewise, risk management controls, such as those covering cybersecurity risk, money laundering, consumer protection, and other operational risks should be in place. The third step is to understand operating and business model. As the product or service is being offered in the market, the BSP can have better understanding of the operating business models as well as technical considerations. The fourth step is for the BSP to adopt appropriate regulatory approach. Once the BSP fully understands the operating business model, as well as detailed mechanics of the innovative product or service, then appropriate regulations will be issued. Lastly, the BSP closely monitors developments and related issues. We continue to monitor developments and introduce supervisory enhancements when necessary to address emerging issues and risk. Similar with the BSP's existing regulatory framework and supervisory approach covering banks and other financial institutions, the BSP also applies the same framework and approach that is commensurate to the FinTech's risk profile and systemic importance. This framework incorporates the following policy considerations. First is the prudential objective. In determining how BSP should supervise FinTechs, the safety and soundness of the individual institution, the stability of the financial system, the advancement of financial inclusion, and the undue regulatory burden are taken into consideration. Second is the landscape of the financial system. In order to draw a holistic supervisory approach, BSP needs to have information on the financial ecosystem, particularly FinTechs. These include asset size, business condition like liquidity, profitability, capitalization, among others. Next is the risk faced by the FinTech. Considering their other business peculiarities, it is very important to identify the risk associated to FinTech operations. This may include cybersecurity risk and AML risk, among others. And lastly, once we have identified this important information, we will now employ appropriate risk management standards based on the FinTech's business model, risk profile, and degree of systemic importance. The ongoing challenge for the BSP is how to stay ahead of the curve when it comes to emerging financial technological innovations. In the same way, technology is changing the financial industry, the BSP is also adopting innovations to enhance the way we regulate and supervise financial institutions. This is through the use of the regulatory technology solutions aimed at enabling the BSP to have a more intensive, risk-focused, and forward-looking supervision while easing BSFI's regulatory compliance burdens. We are exploring RegTech and SubTech solutions, including the use of artificial intelligence, machine learnings, and APIs to enhance the timeliness and quality of our risk-based decision-making. In fact, we are now in the final stages of pilot implementation of 2 RegTech solutions. The first one is an automatic compliant handling system using a chatbot with the primary objective of improving the way customers lodge complaints against financial institutions. The second is an API system that automates the collection, processing, and analysis of data from supervised institutions. Previously, banks were burdened by a time-consuming validation process involving more than 240 Excel-based data entry templates with 100,000 plus data points. The resulting delays in the scope for human error posed complications on our data and statistical compilation operations. With this modern API system, manual intervention is eliminated since data sorting, sanitation, and validation processes are fully automated and secured. With the same 7,000 data validation rules still being applied, processing time of files returned was cut from more than 30 minutes to just 10 seconds each, thereby streamlining the entire end-to-end process of regulatory reporting and validation. On the other hand, for the less sophisticated supervised entities that cannot immediately migrate to the API-based reporting, we develop a central automated reporting environment referred to as the F1 portal. The FI portal provides a single electronic platform upon which FIs are submitted reports. receive feedbacks on its acceptability, and exchange correspondences with a BSP on matters related to report submissions. It offers a more secure process of submission through a web facility where supervised entities can upload the report instead of sending them via regular email. We're also undertaking major organizational reforms and initiatives for a more proactive supervisory stance. We have also recently set up a bigger, better, and more agile financial technology subsector to ensure the operational as well as cyber resilience of the financial system. The new subsector in charge at fostering responsible innovation in the financial services and payments industry is composed of two mission-critical departments. One is the Technology Risk and Innovation Supervision Department, which is primarily responsible for conducting on-site and off-site IT supervision of regulated entities. It is also in charge of cyber security surveillance and promoting digital or FinTech innovations through BSP's regulatory sandbox. The other department is the Payment Systems Oversight Department, which is mainly responsible to the payments oversight, licensing, and policy development for a safe, efficient, and reliable national payment system. PSOD is our lead in enforcing a holistic payment oversight framework, including the National Retail Payment System, or the NRPS. In conclusion, the BSP adopts an open and flexible approach to financial innovation, given its crucial role in expanding our financial inclusion agenda. We are closely engaging with the FinTech stakeholders to gain a better understanding of their business models, processes, and systems. Our main challenge is to strike a balance between promoting and enabling a policy and regulatory environment for emerging financial innovations and ensuring consumer protection, security, and financial stability. We aim to establish a forward-looking approach to ensure that regulatory and supervisory frameworks are in tune with emerging trends and developments. Ladies and gentlemen, we are in an era where the biggest challenge is to keep up with the rapid pace of technological changes. To stay relevant, it is to remain proactive and vigilant in monitoring the advancements in technology and develop corresponding innovative solutions that intersects with traditional banking and other financial services and be agile. We need to take advantage and harness FinTech innovations that can be used to unlock financial inclusion barriers and facilitate digital financial transactions in ways never imagined before. Finally, the BSP, as your partner in promoting financial innovation and inclusion, is committed to supporting beneficial FinTech innovations through an enabling policy and regulatory environment. I hope that as we all do our part on this, we keep the convenience, safety, and well-being of the Filipino people in mind. Thank you, and I wish everyone a fruitful conference.
Thank you, Governor Ben. At this point, would like to invite once more to the stage Ms. Stephanie Chong of eCompermo and JP Ellis from C88 as they give a certificate of appreciation. Thank you, Stephanie and JP. May we now invite the Board of Directors of eCompermo for their photo with the Governor. Thank you to the board of directors of ecompermo.com. I would now like to call on the rest of the ecompermo team for their photo with Governor Ben. Once again, Governor Ben, it's really an opportune time to meet the governor just a day before the next monetary policy decision. I don't think he's going to give some hints, but that's fine. We're going to be breaking it for you soon as it comes out tomorrow at 4 p.m. You know, it's really wonderful just to hear about the art of the balancing. It's really significant for the Bangko Central's goal to just strike that right balance between enabling the useful innovations and managing the associated risks. Now, let's move on to the first of the three roundtable discussions, starting with a full range of real customer issues, from the lack of financial awareness to predatory lending. And what probably peeves me the most, and probably you yourself as well, no feedback on those successful, unsuccessful applications. Well, so much for those car loan insurance applications. Please welcome our moderator, Mr. Vince Rapisura, the president and founder of SEDP, the Social Enterprise Development Partnerships, Inc., the Philippines' premier capacity builder in the fields of microfinance, social entrepreneurship, and financial literacy. Vince, all yours.
Yeah, thank you, Kathy. So, good morning, everyone, and welcome to Finovation's first roundtable discussion entitled Rejected to Accepted, From Rejected to Accepted, Consumer Insights. My name is Vince Rapisura, and I'll be your moderator. But before we move into the panel discussion, eCompermo actually prepared a video for us to set the tone for the discussion. So let's watch this.
Outline, play. Outline.
So ayun, this was my first photo. Mukhang amateur, pero proud ako dyan. Hindi naman sa pagmamayabang, pero phone lang gamit ko na. After college, napilitan ako mag-telemarketing. Pays well naman. Brutal nga lang yung hours. Taking portraits for me is special. Gusto ko man gawin siya professionally. Kailangan ko ng tools din. Kaya slowly nag-iipon ako para sa camera body. Pero mahal talaga. Di pa kasama yung lenses doon. Sa paningin ng bangko, yung pagiging telemarketer is not a stable job. So madalas yung loans ko talaga is nade-decline. No? May mga bills na kailangan bayaran para sa pamilya, and dreams have to wait talaga siguro.
My friends say I'm compulsive na daw. Sometimes when I see a new bag, I just have to have it. I try to get loans as well kasi limited edition na by the time ma-afford ko. Maaga ko na nabibili pero panibagong problema naman. Almost na doble ang binabayaran ko sa interest. Madali kong nakahiram pero you know, ang hirap bayaran.
Binuksan po namin yung store 1989. Sumapat naman po sa aming mag-asawa. Napagtapos nga po namin si Junior at si May. Kilala po kami dito dati. Basta sabihin nyo lang po yung pangalang Aling Hedy at Mang Dado. Gusto ko nga pong nagbabantay ng tindahan dati kasi maraming nakakakwentuhan. Kasi po, simula nung nagbukas yung mall sa labasan, konti na lang yung dumadaan. Naisip po namin mag-expand ba. Nag-try po kaming lumapit sa bangko para sa karagdagan na kapital. Pero hindi daw po sapat yung kita namin eh. Hindi naman nawawala ng pag-asa. Baka sakali pa rin may tumanggap na iba.
Okay, so that video reflects the challenges of what the typical Filipinos experience on the ground. So I'm happy to introduce to you our distinguished panel who will join me in a meaningful conversation about challenges and obstacles facing financially underserved Filipinos. So first, let me call on from the Bangko Sentral ng Pilipinas, Ms. Pia Bernadette Tayag. She's the Managing Director of the Center for Learning and Inclusion Advocacy of the BSP. From Asia United Bank, Mags Vasquez Sortida, Head of Cards. From Smart Communications, Mr. Harvey Libarnes, Financial Service Head. From Cachalo, Mr. Hamilton Angluben, the General Manager. And of course, we have the CEO and co-founder of eComparemo, Ms. Stephanie Chun. Okay, so thank you very much. So we just saw 3 interesting cases about the challenges in accessing financial services. So one is a telemarketer and an aspiring photographer, let's call him Alvin, who got declined for a loan because of his unstable employment as a telemarketer. The other case, let's call her Christina, is a compulsive buyer who fell prey to predatory loans online. Lastly, we have Aling Hedy and Mang Dado, who would like to grow their sari-sari store but got declined in their bank loan application. So the common denominator for the video, for the case studies actually is about loans. But when we talk about financial inclusion, are we really just talking about loans? So let me ask the BSP, Ms. Pia, how does the BSP define financial inclusion?
Thank you, Vince. First of all, thank you to eComparemo for inviting us to join your Finovation 2019. I think the governor presented how we are approaching this innovation to not just promote financial inclusion, but really the efficiency of the financial system in general. To your question on financial inclusion, you are right. We have an official definition, and this is also accepted by our national strategy for financial inclusion. It's effective access to a broad range of financial services by all. And here I really emphasize effective access, because this does not just require having a bank there, having a financial service provider there, but that they are actually, that people actually go there and access their services and use it for their benefit. So having a loan, but then if it doesn't really improve, or address your financial objectives, then that's not what we call effective access.
Okay.
And it's by all segments of the economy, as well as each individual.
Yeah,
so
so
it's quite a big objective.
So from top to bottom, no? But can you tell us more about the key areas of your strategy map for a more financially inclusive financial system?
Okay. So I'll anchor on the presentation that you said, the 3 videos. I think these highlight some important elements of why we are doing what we are doing. So as for the Bangko Sentral, our concern is really to promote, as we heard the governor, an enabling policy and regulatory environment. And this might seem motherhood. It might seem like, it's too broad, but I'd like to actually show you some tangible results or benefits of this. First of all, the approach of the BSP to be open and flexible and to innovations in the market is key. There are some regulators that if it looks different than what we are used to or what we are comfortable with, will immediately say, sorry, you cannot do that. But with the Bangko Sentral, the test and learn approach as discussed, was started way back in the 2000s when the first mobile money operators were here. So that kind of thinking that the market really develops new things and regulators must keep pace, that kind of attitude is really what is also supporting innovation. And we are also, apart from that openness, also looking at things that could catalyze innovation. So maybe to highlight 3 things in the digital space that we've put forward that address some of the barriers why some of these innovations cannot take place. So first of all, we issued just very recently, and I'll say just circulars in the last 2 years, the basic deposit account. So this addresses the main barrier why people don't access basic savings account. The fees, the proximity to the bank, the documentary requirements. So we said, okay, a basic deposit account is something that has no dormancy, 100 pesos and below you can open, no other charges. And for the bank, this might be too costly, so we said, okay, an exemption on the reserve requirements. But then there's an account, but they can't go to the bank. So we've actually also, just in the last 2 years, issued regulations on cash agents, allowing the banks to use third parties, pharmacies, small groceries, to act on behalf of the banks, to open accounts, to service these accounts. And then what the governor said, the national retail payment system. We want the people to see the value of an account. So while 9 out of 10 Filipinos make payments, and so it's a need that they do. So if you can do that through your account, enabled by an interoperable retail payment system, then you have the incentive to open that account. So these are examples of regulations that we've put in place for the market to develop solutions around this to address the very barriers of financial inclusion. So that's one aspect, the enabling environment, the proactive policies. And the next one is that innovations won't take off without the trust and certainty from the public. So one of our two-pronged approach here is ensuring a consumer protection framework to make sure that the customers know what products they're accessing, and also a financial education component to make sure that they benefit from the financial services that they access. So those are the 3 areas that we are working on this.
Okay, so thank you very much. But going back to the video, I think you would agree with me that the most interesting persona there was Christina, no? Because she's a shopaholic and she fell prey to predatory loan providers online, and she's now not able to pay her loans. No? So let's ask Mags, no? As coming from the banking sector, would you extend a loan to someone like Christina?
We always want to think that a person deserves a second chance. So although we can probably see if that person has failed to pay a credit card, then we'll probably see that person having a line in the bureau score. So it depends on some of it, like these are credit card related, and we'll know that. And if we feel that that payment is credit card related, we give you a second chance. But if it's like 3, 4, 5 unsettled obligation, it speaks about the person. So probably not this time. But we can also see if that person is paying up. And we see if that person is shaping up. So there, we give that person a chance.
What would be your tips for someone like Christina to improve her credit standing?
When we entered the credit cards business, we were relatively a new player. So we said, okay, there's like less than 10% credit card penetration in the country. So we said, okay, there's a big opportunity in terms of serving the uncarded. We don't want to focus on the high-income segment because that's overcarded. So the uncarded is a big segment. It's growing. So we said, okay, these are young people. These are tech-savvy, mobile-savvy. They're part of the working population. Let's understand them. So what we learned is that a lot of them have fears owning a credit card because of the bad stories. Difficulty in terms of payment timing, because a lot of the credit card due dates will probably be in what we call peligro days. These are days leading to the payroll dates. So that means a lot of them are not able to meet the deadline for payments. Second, a lot of them through the bad stories of overspending. So which means because they need a lot of financial literacy, financial education. A lot of them get excited when they have credit cards. They use up the credit limit. And based on the focus group discussions we had, most of them would just like be crying and say, oh my gosh, this is what I have to pay. And they end up paying for the credit card over a long period of time. So that's why a lot of them don't have credit card because of that fear. So what we said is, okay, let's innovate on a product. So we came up with a credit card, the first of its kind in the market, that allows you to choose exactly or how often to pay. Which means, when is it comfortable for you to pay? Is it monthly, semi-monthly, or weekly? And we also ask you exactly when you want to pay. So if you choose monthly, what exactly is the date that you can afford to pay this? 1st to 30th of the month, tell me. If you choose 2 times a month payment, we've given you a pairings of due dates that can be timed to your payroll dates. And when you say you're more comfortable paying weekly, what are these days from Mondays to Sundays? So, and then we ask you, how much can you afford to pay every month? So, in this way, we're able to address the due date timing issue.
Okay.
We're able to address the bill shock issue. We're able also to address the overspending, because we also ask you how much you can afford to pay. So of course, because if it's credit card, we're able to address also the good things about credit cards. Cash is convenient, the fact that you can use it online, and the fact that you can earn points, do 0% installment.
Right.
So what we see is, of course, we launched this product online because banking on the fact that they're mobile savvy. So we launched this online. A lot of them, of course, we are not able to validate through the bureau scores. So we had to collaborate with FinTechs for us to be, for the development of digital scoring, social media scoring, telco scoring. We've also collaborated with a FinTech that required us, or that made us develop a psychometric test, the same test that's used in Latin America and in Africa for unbanked. So we launched the product, we've had good reviews, and today 50% of our credit card base are uncarded or first-time card holders.
Okay.
Of course, the 50% is to service our bank depositors.
Yeah.
So, yeah.
So you also mentioned that you're actually targeting the uncarded market
Yes.
segment, right? So because from experience, when I was younger, no, I was actually forced to open a bank account, and that bank account became a guarantee so that I could get a credit card. How is it in AUB?
Well, it's called a secured credit card. There's a portion of your applicants who would be like that. In our case, when we see, because there are some people who have not really settled their cards or their loans in a manner that we feel we're still comfortable to give you collateral-free credit. So some banks do that because they feel like, okay, we are still not comfortable, but yet we're prepared to give you the cashless convenience. So because, like for instance, you have 2 unsettled loans, but we can still recognize that you will have emergencies in life. You need a card sometimes to pay an advance bill for the hospital, to do groceries. So we give you that. We give you a portion of your deposit for a credit limit. And then after 3 months, 6 months, we can tell you, okay, you don't need that secure deposit already.
Okay, and you also mentioned that it's good that you mentioned, coming from a credit card sector, that you emphasize education for the customers on how they're spending. So what are the efforts of the bank towards financial education for the customers?
Okay, so we, of course, when we have our application, we make it easy for them. Step 1, choose your due date. Step 2, choose how often to pay. Step 3, choose the amount that you want to pay every month. Step 4, of course, there's a big disclaimer there that if and when you're not able to pay in full, okay, we will charge the interest. And of course, that's repeated all through the statement of account. But it doesn't mean that because of those reminders, they will not pay late. There will always be like a percentage of the portfolio who will pay late. Okay, but do we accommodate the reversals? We give accommodation.
Okay.
Especially if we know that
How many
this is-
times?
because you already chose your own due date, you already chose your own minimum amount due. Depends.
Okay.
Of course,
Because it's
depends.
already highly customized to your requests, then once is enough.
In fact, that's why we've also extended our payment channels. You can pay our card in 7-Eleven, LBC, pawn shops. So that's why when they say, okay, can I reverse my, okay, so how many times have you paid late. So it's, there's a lot of balancing act there, happening.
Okay. So going back to the video again, no, let's talk about Alvin also. And this time I'd like to ask Harvey from Smart Communications. Because Alvin believes that the banks disapproved his loan because as a telemarketer, he's perceived that his employment is unstable. So what are the initiatives of Smart in providing alternative data to financial institutions so that Alvin can get approved for a loan?
Yeah, okay. Before I answer that, allow me to just give a bit of a background or why I'm here. We were asked to attend because we've actually been doing telco scoring for over 3-4 years now.
So what does that mean, telco scoring?
Okay, as you know, 96 or more than 96% of our customers are on prepaid. So literally we're blind when it comes to the profile of our customers, right? And the good thing about prepaid is obviously our services are there, so that it's very low risk. But the bad thing is our services stop as soon as the load runs out. Yeah. So about more than 7 years ago, we started lending or advancing airtime rather. And if subscribers run out of load, they can, and they don't have the time to top up yet or go to a retailer, they can borrow from Smart and our partners. Thing is, what we found was we were lending up to 10 pesos, and every time and the recovery rate was about 83%, 82%, so the churn was quite high. And what we found was every time we added 5 pesos to the value that you could borrow, churn would increase by 15%. So clearly, it's not a sustainable business. So about a little over 3 years ago, we started credit scoring and telco scoring with Experian. Right?
Okay.
We took about over 100 data points, and we started analyzing our customers' behavior. And it worked out pretty well. We started giving airtime advances of 100 pesos and more.
Okay.
But the recovery was actually around 92, 96%.
Okay, so there's an improvement.
Yeah, so what we found was that the telco scoring and the machine learning that we were engaged in after 3-4 months was really, really effective in profiling the churn and default rates of our customers, right?
Yeah.
So we started migrating more and more of our services here, and we took it even a step further with another partner, FinScore, who I understand will be giving a talk later, where we took it to about 400, 450 data points.
Okay.
And they're doing that now. And last November, we launched a telco score service, right, which we found to be highly predictive on default rates. Yeah.
Sounds like Cambridge Analytica to me. No.
But
yes, can you give us
with
some
a lot of opt-in?
Can you give us some examples of the data points that you gather and how these are collected?
Well, okay. Sige, now I'll try to relate this to Alvin. Right. Okay. You see, the good thing about mobile is, especially when you're talking about 450 data points, it pretty much captures your digital footprint, right? So even if you start moving from company to company, we see who you are. And of course, as long as you're with Smart throughout the whole time, we see that your usage is constant. We can see whether in the last 12 months or more, if your payment habits have changed. Despite moving company to company, if your payments habits are still constant and your usage habit is constant, then it's a pretty good indicator as to there's a sense of stability.
Yeah.
We're able to also assess the veracity of the data that you provide when you're trying to avail of a loan. For example, if you would like to avail of a loan, you say, I live here, I work here. Literally, we can validate whether you are in those areas that you say you work and live in, right? Yeah. If you say you have a co-guarantor and a reference contact number, we're able to validate whether you are actually in contact with those people or not. We're able to validate that the phone number that you're giving has been active for X number of months or years. And that's just the first part.
Okay.
Yeah. We're talking about validating perhaps, the 30% or the information of the people who you're normally used to because they're banked. The cool part is what we found was beyond the 30%. the 70% who we don't know, it's highly indicative also. And we've taken a sample of what, 1.4 million subscribers who, well, because they opted in to scoring, we took that sample, and we have a fairly strong predictor now on how much you could be able to lend them.
Okay.
And in our use case, we really encourage working with FinTech partners who are heavy on the lending for smartphones.
Okay.
Because our ARPU increases, yeah. So
Yeah, but Harvey, let's put it to a level that Alvin could understand. So if I were Alvin, no, and I wanted to boost my data points so I could get a loan approval, what should I do?
okay. This is a live use case today. If you go and try to, for example, Alvin wanted to buy a smartphone, and he moved companies. Yeah. Today, if you were to go to one of the retailers and one of our FinTech partners pull your score because you give your opt-in, they'll be able to check your potential default rates and give you a loan. So even if you're moving between companies,
Okay.
your score will be a very strong predictor.
So that's one. The employment history is checked. Another data point, maybe?
There's a lot. Usage. You see, it's not so much the data, but what you do with it.
Okay.
So what you're really trying to do, I think, when you score is come up with a picture of predictability, right?
Okay.
How much you can lend, and so that's really what we provide, I guess, banks and fintechs. Yeah.
Yeah. Yeah, but also let's not forget that in the video, Alvin also tried to save up to get the professional camera, right? But I think he needs to learn more how to do delayed gratification, and maybe he should attend our trainings. Isama na rin natin si Christina kasi mukhang kailangan din niya ng training on financial education. Anyway, going to my favorite case, no, si Aling Hedy and Mang Dado. So they want to grow their micro-enterprise, but the bank disapproved them. So let's ask Hamilton, how can Kashalo help them?
So Kashalo really works on a lot of alternative data. So a lot of these people don't have any financial identity, no financial track record. So specific to the sari-sari store owner, we actually have a pilot now with URC. So what we do is that since, let's say, they purchase from a URC distributor, we have data on what they purchase, how frequent they purchase, and how often they pay, and if they're a good customer. So because of that data, we are already able to predict if the good behavior of this potential client. So for this one, it's more of distributor financing. So instead of loaning a person cash, we give them goods from the distributor.
Okay.
So it's such a great product because for us it reduces risk because it's not cash. Because cash is much more prone to fraud,
diversion,
and yes, scammers. Yeah. And at least these are businessmen, these are business people, and that in itself is a great indicator of someone's willingness to pay because they are more responsible borrowers. So yeah, that's one of the ways we are able to help MSMEs.
So how can we how can we apply for a loan from Kashalo?
We have a lot of products. Actually, we have products for all the ones you featured. So for the first one, for the telemarketer, so his problem was his job, right? So his occupation. So for us at Kashalo, we look beyond the person's occupation. We can ask for whatever bank statements. We also do not always require that you come from this industry. In fact, when we were starting, just like traditional financing institutions, we blacklisted the BPO market. But then I said that we are not being inclusive if we do that. So we just set some parameters, whether they're already with the BPO industry for 6 months to 1 year.
Yeah.
That's a positive for us. So we are open to lending to all various types of whatever the occupation is.
Do we have to go to a brick and mortar office to apply for a loan?
No, absolutely not. All our transactions are done through the app. Everything is online.
Okay.
And
Because the Aling Hedy and Mang Dado looks like they're not digital natives. So how can you address that?
so it's really part of financial education. So this one, particularly for the sari-sari stores, we are working closely with a distributor. So their sales agents, it's like we sort of train the trainers. So it's their sales agents that guide the sari-sari store owners throughout that process.
Okay. And Hamilton, if I may ask, how does your interest rates compare with the banks?
Depends on, we have 0% as well. Very similar to credit cards. We have that promo. We don't have fixed interest rates because we give interest rates based out of credit scores, our own credit scoring model.
So it's based. So I actually checked, no, like Kathy, I also did my assignment. So I checked online and I found out that it's 10% per month. It's 0.3316 per day, right? So with that high interest rate, why should borrowers choose Cashalo over other financial institutions?
So I think that one is really for the most risky clients, but it's still way below than the 5.6
yeah, agree.
predatory rate. So in fact, if no one will give them this type of loan, they will resort to 5.6 and other predatory lenders.
Right. So you're lower than 5.6, and I think, as you said a while ago, that your processes are also quicker. How long does it take for an approval to be
We
done?
approve in as fast as 8 minutes.
Wow, 8 minutes. Okay. Okay, so going back to the video again, no, I like the ending of the video where Aling Hedy expressed her hope for the future. And that's a very Filipino trait. So if, to Steph, what are ECM's initiative to address the roadblocks to financial inclusion?
Our initiatives again, can you repeat the question?
Yeah, what are your initiatives, what are ECM's, Ecompermo's initiatives to address roadblocks to financial inclusion?
Okay, first of all, Ecompermo is there to connect the consumers to the partner institutions. So one of our very important mission is financial education.
Okay.
So with financial education, we believe that it would mitigate the roadblocks. Another thing is that we make sure that our website is equipped with all the information you need. We have at any given day, around 50,000 to 1.5 million viewers a month. So what we have in our website is very important to empower the consumers in making choices, in making sure that they're eligible. So that's on the part of the consumers. So you would see here that our marketplace provides comparison. So when the consumers compare, it would allow them to make choices that otherwise they won't have.
Right.
We also try to manage their expectations, because then on their own they would know what are the products that they would eligible for. And again, as I've said, our website provides information. So we do a lot of content that would be geared towards education. So that's for our consumer side. Now for our bank, if we can just there. For partner institutions, our marketplace provides them help in targeting their target audience. So we have managed solutions that would enable them to reach their audience. So we give them quality customers. So we're not just lead aggregators wherein we just churn out names and giving it to our partners. We actually really have a metrics that would address their target audience. And we also provide tools for onboarding, for digital onboarding, and my co-founder JP will be talking about that more later on.
How does, given that your platform is able to compare products and services of financial institutions, did this already lead to healthy competition that ultimately benefited the customers? Say, did your site drive down interest rates, faster processing times, and better customer service?
That is actually our ultimate goal. It's all about our consumer.
Mm-hmm.
So we make sure that the consumers have the choice. We empower them with this choice. So the partner institutions will then have to make sure that their turnaround time, their customer service, their interest rates will be all transparent and will always be geared towards the consumer. Because with our platform, and given that we have, again, around 1.5 million people who go to our website every month, it's really giving the consumers this choice and putting the power into the hands of the consumer.
Okay. And I'm actually a part of the microfinance industry, and I think it would be a disservice if I don't put this question forward. I have with me the two largest microfinance institutions through your invitation, ASHA Philippines and CARD, and also the largest network of cooperatives, the National Confederation of Cooperatives. So the microfinance NGOs and cooperatives are actually at the forefront of doing financial inclusion, right? And based on BSP data that I checked this morning, 92% of the outstanding microfinance loans actually come from microfinance NGOs and cooperatives. But why are they not in your ECM platform?
This is our morning show. But yes, thank you for that, and thank you for the people who come here. We are actually prepared to work with the microfinance sectors, and in fact, we welcome that.
Yeah.
And we are so happy that they're here.
Right.
And we have already made the steps towards reaching out to them, because our goal is not just education, but financial inclusion. We are working with the BSP to make sure that we're able to reach a wider audience. We also work with partner institutions in shared risk. So we have strategic partners wherein we share the risk in giving out this credit cards and loans to reach a wider audience. So definitely, the microfinance sector is something that's in our radar,
Right.
and we would definitely be working with them pretty soon.
Yeah, because we recently conducted a research with the World Council of Credit Unions, and what we found out is that members of the microfinance NGOs and cooperatives, their average age is about 45 years old. So I think your digital onboarding initiatives, if you are able to provide that to the cooperatives and microfinance NGOs, then perhaps they can go to the younger market segments and move forward for our financial inclusion. Let me go back to Pia. No? Of course, we commend the BSP for formulating policies and regulation that's recognized as one of the best in the world. However, in my experience, doing consulting for rural banks and commercial banks, compliance still remains an issue to reach the unbanked. So what are in BSP's pipeline to trailblaze financial inclusion further? We know that you're already doing a lot of things, but what can we expect more?
Well, on the compliance side, we have to unpack that. No, that's such a very big area, and there's many areas there. So AML compliance is one, and the electronic KYC, digital onboarding, those are now allowed by regulation based on the risk appetite and capacity also of the bank. So that is designed to lower some of these costs. What the governor mentioned about the API-based reporting is another big issue because of compliance to report submission. So those are the areas that we are working on. And I guess in terms of expectation, we're also doing our own RegTech solutions. So this will also redound to savings on compliance for our supervised entities. But if I may just make a comment no, on what I've heard from this panel. I think Kathy started with what's the definition of Finovation, and there was none. So kudos to eCompermo for coming up with your own phrase. But FinTech has a definition, and BIS espouses this, so we follow also the BIS definition. It's innovations in business models, processes, products that have a material effect on the way financial services are delivered. So the material effect is, I think, key. We don't innovate just for innovation's sake, but really to have some substantial positive outcomes. And here we heard bespoke products, like very customizable. We heard from our cards, getting alternative information. These were not possible before. So having this and then translating that into more access, more products, I think we're achieving that. No? But if I may point out, we really need to also always keep in mind the customers. The eCompermo, as Steph was saying about giving them choices, the Bangko Sentral is working very hard in making sure the financial education is addressed. Because when we took the survey, only 3 out of 7 questions were answered correctly by the Filipinos.
Yeah.
And you know where Filipinos fail to answer correctly is in the very basic concepts of time value of money and compounding interest. So if you don't understand time value of money, even if you see interest rates and then you don't know, you can't even grasp the importance of saving. You can't even really compare, appropriately across products. So that one, we're working on institutionalized partnerships with DepEd to really incorporate in the curriculum, to incorporate in the civil service training programs and all of that, to institutionalize a level of financial capability that can allow them to make informed choices. Of course, tools, in comparison, these will really work well, but that kind of knowledge has to be there. And if I may make a pitch to the financial service providers, we issued a new regulation. It's a revised regulation on consumer protection, Circular 1048. This puts the responsibilities of financial service providers in terms of transparency and privacy of information to really make these understandable. And financial education at point of sale is also very effective. So to call on the financial service providers to meaningfully implement this so that the customers really know, okay, now they have access to products because of technology. Now their information could be used if they were thin file customers before, but now they have alternative data. But can they really use it to their advantage and to their benefit? So these innovations are great, but we really have a responsibility to take the consumer protection very seriously. And this is something we need to work together as an industry, regulated, private, public, in terms of really pushing this forward.
Okay, so...
Sorry if went over from your question, but I just really think it's an important point to make. Thank you.
Agree. Okay, let me ask the other panelists. No? So what are your plans to move financial inclusion forward? How can we do better?
I just like to add on financial education and financial literacy. For us at Kashalo, it's not CSR to push really financial education because so here we are as alternative lenders, and then the ones that we lend to are first-time borrowers. So that's good. That's one part of financial inclusion, right? But because a lot of them are first-time borrowers, they don't know what to do with this newfound credit. So some of them think and treat it as new money or free money, and then they don't feel the responsibility to repay.
Right.
So that's why we have to complete the chain and bring in financial education, financial literacy. And this way, they become responsible borrowers.
Right.
And when they're responsible borrowers, now they repay, and of course, eventually, they're included in the whole financial ecosystem. We're able to give them lower interest rates, higher loan amounts, and so it's very important for the sustainability of the industry.
Okay. Steph?
So just to give a background on the name of Finovation, when we were thinking about our event, I realized that we are not going to be following any template. We're not going to be following any best practice. It is time to do our own best practice. what we feel will be best for us, best for the consumer, best for the partners, best for everyone. So what better way of doing this than inventing a whole new name, which we hope maybe in a few years will be in Wikipedia and in the Webster's Dictionary. But yeah, so that's how Finovation was brought about. What can we do better? Basically, right now, we want to go into the grassroots level, meaning really educate the students. Because when you start educating the students in financial literacy, by the time they get ready for the financial products at that time, then they would be able to handle their first cards properly, their first loans properly, their first car loan, all these things. Now, on the part of our partners, our strategic partners, we also try to educate them. How? They've been in the industry more than, longer than us. Well, this is what we're trying to push, shared risk. Because certain banks have their own metrics and appetites in who they loan to. But then we also wanted to make sure that we are on the side of the consumers as well. And that means financial inclusion. And how can we do that if we do not take the risk ourselves? How can we just keep on talking without actually, biting the bullet? So we do our shared risk. We offered it, actually one of our partners is AUB, so we do shared risk. And we say, okay, just so that you know that we are also biting the bullet, let's do it. We will be the first one to evaluate the high-risk segment. And then once we have proven to you with the given matrices that it will work, and then you share the risk. So that is our part in educating our partner institutions.
Okay. So I think we all agree that financial education is one of the key drivers for financial inclusion. So it gives the power to the customer to discern and ultimately choose which product is best suited for their needs. Of course, regulation is also important because it sets an enabling environment for the financial system to thrive. And we also recognize that regulation and supervision for financial inclusion is a delicate balancing act, but we should put the welfare of the customers first, no? And at the end of the day, what we all want to have is a menu of choices that are accessible to a wider number of Filipinos in order to address their financial needs. So our hope is that this leads to prosperity at the individual level or household level versus oppression and over-indebtedness and economic growth at the national level. So thank you very much to our panelists. I think we have a very wonderful conversation. And but I really, really want to say this back to you, Kathy Yang.
Panelists who have provided real solutions on financial literacy, and perhaps maybe the word Finovation will be Googleable, because the last time I Googled it a couple of weeks ago, the closest word was Finovate, and it came from Europe. Perhaps after today, Finovation will come on Google and from the Philippines. And before we proceed to the second of the 3 roundtable discussions, let me let you in on best practices in innovation in the industry in terms of microlending. Finn's got us started in microfinance, so we head on over to microlending and how data solutions allow the rapid scalability in the market in an emerging economy such as the Philippines. Please welcome Christo Georgiev, the country manager and chief strategist of FinScore. The firm provides data-driven solutions to help financial institutions, technology, and content companies serve customers better. Christo, take it away.
Well, thank you very much, everyone. How do we switch this on? Okay. An amazing panel earlier. It was really, really insightful to hear the topic, to hear so much on the topic of financial inclusion from different perspectives, both from the regulatory perspective as well as from members of the financial institutions. So thank you very much, guys. In addition to it, I would also like to thank to our host from eCompermo for giving myself and FinScore the chance to talk about our experience in financial inclusion over the last couple of years on the market, as well as to share what we have learned throughout this journey. I suppose by now you're wondering why is there a man with a movie villain physique and accent talking on the stage. My name is Christo Georgiev. I'm the country manager and chief strategy officer for FinScore, and it's an honor to be here with you. Let me see how this works. Okay, so I'm gonna start with a slightly untraditional way. Does anyone recognize this picture? It's a picture, as it's written in the lower left corner, it's a picture called, it's a painting actually by Jackson Pollock called The Deep. And there's a good reason behind it. There is no talk about financial inclusion without talking about scoring and evaluating the individuals behind it. There is no talking about credit scoring without talking about data. And there is no talking about data without talking about the humans that generate it. Data doesn't just flow somewhere out in space. Data is generated by humans. And it captures the behaviors of humans, and it captures the information about humans. What we learned in the market over the last couple of years, it has been that there is definitely not enough information about humans on the Philippines market in order to be able to receive financial products. When our business first started its lending operation on the Philippines market, there had been a very big discrepancy between the traditional information sources that you find on in developed countries with the ones that you normally see, that you can see in the Southeast Asia and in the Philippines in general. There was very limited information circulating in credit bureaus. The traditional or the government-supported infrastructure such as credit and income registries were not as developed or definitely not digital. There was no national ID, or I think there is still no, maybe in process. And in addition to it, a vast percentage of the population has been either underbanked or underserved by the financial institutions. Okay. So what this typically leads to has been the very big discrepancy between the upper part of the pyramid, the so-called 30%, which are the banked customers, which have access to different kinds of savings and insurance products, which do regular payments and transactions, which are able to do remittances, which are able to be digitally active on social media, which are able to shop online, and which generally have very good access to different kind of credit products as well, be it credit cards, be it motorcycle loans, be it mortgage loans and everything else, as opposed to the remaining 70% based on BASP data, okay, which are financially underserved customers who are targeted primarily by the informal financial institutions, who have a very high risk and a high cost for borrowing, and who do not have the ability to transact digitally. Now, these customers, traditionally what happens to them if they try and apply for a loan is they're going to get rejected right away. And that's pretty much the exact opposite of financial inclusion. There is also a very good reason why we are talking a lot about predatory lending companies, and that's by all means the recent articles and behaviors that we have exhibited by some of the businesses should not be overseen. But there's also reasons for these practices, and the reason for it is the default rate in a country like the Philippines is substantially higher compared to other markets. This leads a lot related to education, of course, but the reality of the fact is that the high risk to serve these segments and the high cost for borrowing is a very major obstacle for financial institutions to be able to extend their services. So throughout unleashing the power of different alternative data sources is one way in which this problem of financial inclusion can be solved, and the gap between the financially included and the financially excluded can be bridged. As discussed in the beginning, in developed countries, normally you have the government credit registers, you have credit bureaus, you have home affairs, you have the social demographics data and income agency, and you also have alternative data sources, which provides a 360-degree complete profile view or complete view of information about the potential borrowers on the market. Okay? In the Philippines, at the moment, you have the social demographics data. There are credit bureau information available for a certain relatively small portion of the population. And you also have the alternative data sources. In an environment like this, due to the lower availability of traditional data sources, the relative weight and the influence of alternative data is considerably higher. Now, when we talk about alternative data, what does that mean? We're going to explore a little bit about the different data sources afterwards, but before that, I wanted to just glance through the different ways in which combining alternative and traditional data sources can be useful and can actually lead to very, very different results when you try to evaluate the creditworthiness of an individual. We were talking about the different personas earlier, so let's imagine that, oops, okay. Let's imagine that the first persona is the telemarketer that we were discussing earlier. It's female, it's aged at the age of 18, it doesn't have any home ownership, the income is relatively low, maybe because they're a student, maybe because they're doing part-time, they have been employed for less than a month, and if we base the decision on whether this female, let's call her Linda, is going to, supposed to have access to any sort of financial products, probably the answer would be no. But if we also assess the information available from alternative data sources, such as, let's say, the telecommunications, their behavior on the telecommunications network, we can see that Linda actually had her SIM card for 4 years, which implies consistency. We can also see that Linda is using quite a lot of data, which means that she does own a smartphone. We can also see that Linda has correctly verified throughout the loan application with our financial institution that she was able to correctly verify her home address as well as her working address. This gives us additional information about Linda that we would have otherwise not been able to obtain. Based on this information, we can make a considerably different decision, or in this case, in her favor, whether or not to approve her for a loan product. And that might not be right away 100,000 pesos a motorcycle loan, for example, but it can be 5,000 or 10,000 pesos a cash loan in case she needs it, or a device loan. Okay, so a second use case that we can take a look at is kind of works the other way around. This is, let's say that this is Mike. He is the credit risk investigator's dream. He is age 45 and above. He does own his own home. He has steady employment, and he's a full-time employee. So based on all of these information, he would probably be approved for financial products right away. But if we combine this with the behavior on the mobile network side, we can see a slightly different picture. What we can see is that he's registered with a SIM card that has been with the telecommunications operator for for only a month, which is kind of unusual for someone age 45. We can also see that his home address and work address don't really match with where he's being detected on the network. We can also see that he is listed as co-borrowers or guarantors of his loan, a contact person that he's not frequently interacting with. He doesn't talk to them, he doesn't send text messages to them, he doesn't send pass hello to them. So as a result of this, we can see that no matter the fact that on paper he may look like a great prospect, he might have some fraudulent intentions in mind. Maybe if someone comes and applies for a loan and he applies with a phone number that's barely being used, he doesn't tell the truth about where he lives or where he works, and he doesn't provide his co-borrowers the information about people that they interact frequently with, that's a pretty big red flag, I would say. Okay. So when we talk about alternative data sources, apart from telco data that we already mentioned has a quite high and significant predictive power, it's also very, very important to be mentioned that the telco data cannot be self-amended in the sense that it's there, the record is there, it stays on the network, it cannot be gamed, so to say. And it does equally well for both smartphones and feature phones, which basically enables financial institutions to serve all of the market. There's also other types of data available, such as device data, which is usually obtained through installing an app on your smartphone device, which also has quite a lot of good qualities, but unfortunately doesn't work very well for feature phones, or not at all. We have social media data, which can be anything from Facebook, Instagram, LinkedIn, or anything else that's popular on a particular market. It can be data obtained through web scraping, which is basically the behavior of your users on a website. And it can also be related to psychometric data, which are usually a set of questions that are being asked in parallel to filling out the loan application that are giving additional discriminatory power to whether a user would be, a borrower would potentially be a good borrower for your financial institution. So we've already established that there's various sources of data that can be used on the market, but a very big question is how do we evaluate them? How do we capture the value of these sources and make them how do we capture the business value of these sources? How do we either generate revenue out of it, or how do we save costs thanks to it? And in this other mural, again by Jackson Pollock, you can see that usually this is how data looks like when it's captured by most of the organizations. It's, according to statistics, only 1% of the data around the world ever gets analyzed or processed, which is an absolute shame, especially for companies such as FinScore, who specialize in both working with various kinds of data science tools, as well as who rely on agile technology. But the real problem is that the majority of the data is available inside the organization, but the business value of it cannot be easily captured, which is why the usual approach that we have seen work for ourselves and for our partners on the market is to first consult and evaluate what the data is, how it is structured, what its quality is, and what the certain aspects of it are. Identify the business value of it, run an experiment, measure the results out of it, and if the results are possible, after that, apply it in the real world. I would like to finish up with a couple of words about the future of credit scoring and financial services, the way we see it in the country. Okay. So obviously, there's apart from the telco data that we have discussed a lot about today as a way to be used as a way to evaluate creditworthiness and as a way to combat various kinds of fraud. The alternative data sources that we can see, such as psychometric, device data, social demographic, internet, and social media, can all be aggregated in order to provide a complete view of your potential borrowers. And this is looking into the near future. This is where FinScore is headed, and this is where we believe we are going to deliver the most value to the market, as being an alternative data aggregator that provides both services to the end borrowers, to the data owners, as well as services to the lenders and to the data users, to financial institutions and to banks. Of course, no talk is complete without talking a little bit about regulation. A lot of what I discussed about today and a lot of what we have heard from the panel as well has been related to how do we ensure at the same time that data privacy and ethical laws and rules are observed while being at the forefront of innovation and technology. And this is a very, very big challenge. As one of the pioneers in alternative data scoring, we do practice self-regulation. We are a member of the FinTech Alliance, and we abide by the code of conduct. So we only work with financial institutions that kind of share the same values as us and have the same motivations in their business. Thank you very much for bearing with me today. Have a very nice day. Thank you.
Thank you, Christo, and for letting us in on that collaborative power of really a lot of stakeholders. There's banks, utilities, and telcos, and just the power of that. And using data-driven scoring, credit scoring, to offer loans to micro lenders and more end users, so very useful. So how's everybody going? Good, good. All right, because this is the moment. I do see a lot of seats unattended. I assume you're still around. This is the raffle moment, but you gotta be here to get that prize. So if your friends have run off to the loo, maybe got astray in the beautiful lobby of this hotel, please call them back. I'd like to call to the stage John Philip Chung, the Group Head of Technology Operations for C88. And we have a fishbowl here, thank you, ma'am, with all the business cards of the potential winner. John, good to have you with us. If you could do the honors of the winner of a high tea for four at the lobby right here at the Manila Peninsula. The winner is
Mark Albert Emmanuel Ampil of MEECA General Insurance Agency.
Come on stage. I just got lucky having a moment with him just before the event started. Congratulations, Mark. John. Thank you, Mark. Now let's head on to our second roundtable discussion on the industry challenges among the institutions in this rapidly innovating and competitive environment. Our moderator for the panel is the Senior Vice President for the Business Development and Communications Group of the Credit Information Corporation. She was also a tax and corporate lawyer handling corporate, litigation, taxation, civil, and criminal cases. She was faculty professor teaching business law subjects and was a bar exam lecturer of law on private corporations. She is a lecturer of mandatory compliance legal education of the UP Law Center. She was part of the technical working group of the standards and rules for accrediting credit bureaus of the Credit Information System. So please welcome Attorney Ala Bautista, the Senior Vice President for Business Development and Communications, Credit Information Corporation. Attorney Ala.
Hello. Good morning, everyone. Every time we talk about credit, we always get that question, or when we talk about credit infrastructure, it's always interesting to mention that there are two types of, or at least two components of this ecosystem, and that's the credit registry and the credit bureau. So let me introduce to you a very short video, very short clip, so that we can understand more what is this credit registry in relation to the credit bureaus. Thank you. So good morning again, everyone. Let me call on stage my panelist for this second round table. Our topic will revolve around solving puzzles. So these are the best in the industry. So let me call them and let me introduce. Let's start with Mr. Marlo Cruz. He is the president and CEO of CIBI. And he is an expert in banking and finance. He administered, the Credit Management Association of the Philippines, or CMAP, if we've heard of that. And he was the president in 2003, 2005, and 2006. And he also became an SEC accredited compliance officer in 2004. So next on our list is Mr. Simone Colombara. He is the managing director of CRIF Philippines and has 20 years of experience in IT for banking. He consulted for People Bank of China, European Central Bank, SWIFT, and MasterCard. He also advocates the usage of credit scoring to promote increased access to finance, both for individuals and for MSMEs. So next on our list is Mr. Florentino, or Marty Gonzalez III. He is also known as Marty. He's from TransUnion, Philippines, and he works in the Innovative Solutions Group. He is responsible for providing solution consultancy, modeling and analytics services to TransUnion clients. He's a veteran also, a retail banker with over 30 years of experience here and abroad. So he would be bringing with us wealth of experience and expertise to our conversation today. Next is Mr. JP Ellis. He co-founded the Singapore-based C88 Financial Technologies rollout in Southeast Asia. He owns and operates the largest financial e-commerce websites in Indonesia, Sekadja.com, Primero.com, in the Philippines, i-compare mo. So, good morning, gentlemen. For the three gentlemen here, except for Mr. JP, I've met and I have been working with them since 2015 for almost 5 years. For Mr. JP, I met him like 5 seconds ago. So I think this would be really a very interesting discussion because other than them being an expert in this field, we always talk about credit bureau, credit registry. We always have monthly meetings in the office, but I think that the only difference that we have now is we're sitting in comfortable chairs and we're here in this nice hotel room. So maybe we can start with you, Marlo. Talk about these alternative scores that we have. Although earlier, Cristo was talking about the alternative and the traditional score, but maybe you can also elaborate and expound on that, especially on what CIBI is doing now.
Good morning, everyone. First is I'd like to thank eCompare for inviting us here. In as far as the fintechs are concerned, I think there are three main things that the fintech organization are looking for: growth, speed, and accuracy. I'd rather not discuss on the growth as I am not on that, the CIBI is not on that aspect, but we'd rather discuss on the two most important assistance or help that the credit bureaus can provide to the fintechs, which are speed and accuracy. So let me focus then on data. There's a seemingly understanding that there is a lack of data. I tend to disagree because in the Philippines, and I think a number of our credit bureau friends here will also attest to that there's so much data in the Philippines available. However, it is not on the usable form. It is still raw in a sense that it's in analog and it is not in digital, and therefore staged, and therefore that makes us difficult to analyze it. First is to acquire it, to access it. Second is to analyze it. Now, this leads now to the question of verification. I think this is also one of the main pain points of fintechs, by which they wanted to know the person that they're talking to is the real person. There are a number of technologies available in the market that can compare and determine IDs, whether they are tampered, where pictures are tampered or not. But I think the main, or the one important point missing is the validation process. In the years that we have both going through the different markets in the Philippines, we found out that there is a way to validate the person that you're talking to. We found that out as we went through the different industries. We found out that the cooperative checks out the information in the rural banks, or the payment, or the different payment gateways also checks out the information, or the person dealing or paying or whatever transactions they made in the market. And this is a bit compounding in a sense that it's hard for us, as we discovered it in the last, we've been going to the market in the last 3 years that we have gone through, we just recently discovered this. Now, this leads to now credit infrastructure. Credit infrastructure as a question in developing the right tools to provide to fintechs to make the right decision is there. Since the data is available and there are ways to validate information, credit scoring would be one of the best credit infrastructure that the credit bureaus can provide to the different lending institutions. Which leads now to the last question. How does these lenders mitigate the risk. In having the power, the empowerment to validate the person or the information that the person that is providing, a borrower is providing to a lending institution, and a good measurement of the credit worthiness of individual, I believe that this is the help we, credit bureaus, specifically CIBI, can provide as an avenue for what we call the Finovation that eCompare has started and which fortunately invited us here. In all of this ecosystem, there is one important as well partner that we have in order to make it successful, and that is the extensive use of technology.
Thank you, Marlo. That's an insightful statement that really credit score has to be introduced in our market. And Marty, maybe you'd also want to speak on that, like what TransUnion has been doing, especially in terms of your clients. I think some of our audience now, they're also your clients from the banking sector. Maybe just to get some sense of our audience, who among us here from the banking sector? So we have, and your clients. So.
Who are our clients here right now? So, well, I can't really see you so well because of the lights. Yeah, it would be interesting to find out how many of you here are our clients, right? Anyhow, TransUnion has been in this country for around 7-8 years already. And quite frankly, it's very interesting to share with you the journey that we have gone so far, because it's not a straight line. It's a really challenging task. But to boil everything in a few points, I think it's reflecting our experience. The market is very important in terms of its unison towards coming together and putting together, let's say, a company like TransUnion, because it really came not from TransUnion, it came from the BAP. Quite frankly, it was an initiative of Gigi Montinola, sometime 2008, 2009, if I recall it right. For whatever reason, they came together, and that was an initiative to create a private comprehensive bureau, because they believe there's enough space in this white space, right? So that's how it all started with a few local banks, and currently we have around 55 subscribers or members. We have around 8.5 million to 9 million unique customers in terms of our information asset, around 20 million trade accounts altogether. And we do have a credit score, which honestly started from your thick file. So these are, models that were created out of those guys who already have a loan account. And in the passing of time, through certain statistical methods called lookalike approaches, we do have a new to credit score. Arguably, it can always be better, right? It's an ongoing task. And my take, as far as, let's say, credit scores are concerned, yeah, it's important. It allows you guys to scale up. It allows you to make accurate prediction. It likewise rationalizes your credit process to make you more profitable and manage your loss outcomes. But it's an ongoing pursuit. Now, everybody's looking at the unbanked, the underserved, rightly so. That's how development happens, right? There's so much lending products in the market right now to the bank. They're quite frankly oversaturated. But thankfully, they're not overborrowed, because I think banks have actually matured enough and developed enough portfolio techniques utilizing credit bureau information to manage their own respective portfolios. But the unbanked is not yet fully served, right? There's still a lot of white space there. And quite frankly, to FinScore's presentation, rightly so, there is a lot of opportunities there. And I think if you are, let's say, to put this thinking together, right, from TransUnion, from FinScore, or whoever, in the business of creating scores and helping manage portfolios, I think it's got to be under the mantle of the concept of interoperability, partnerships, right, collaboration. Because there's so much out there that we can do in terms of data, which is your traditional data, you've got alternative data, and the modeling techniques as well, to create far more powerful models. Now, as far as we are concerned, we are really in the business of making our models more powerful in the passing of time. So we're currently undergoing a number of initiatives towards that direction. Likewise, the other things that we do, we're very engaged with our clients. It's very important for us to make sure that our clients are realizing the value of the engagement. And part of it is actually addressing their initiatives on the underserved and the unbanked. And this is another thing that I'd like to share with you guys, that, a score is great. It's a tool. But it's not the silver bullet, see? It's not the only thing that matters in terms of managing your portfolio outcomes. There is a process involved in managing your portfolio, which also involves other things like your underwriting process, your verification process, the basics, the credit MIS, to manage basically what goes through the door, what you think are risky things that going through the door, so you can actually do preemptive approaches in terms of policy management, feeding back to your policy design based on the observation of your portfolio, and all sorts of things. So it's a whole dialogue, Ala, in terms of, let's say, how to proceed from where we are, but definitely there is so much room. And I think that interoperability thing, that collaboration thing is a very important thing. Yeah.
Okay. Thank you for that, Marty. For the sake of those who are not familiar, William Glad mentioned, Marty mentioned about thick file. For those who are not familiar, thick file pertains to the comprehensive credit reports. Like, these are positive and negative information, and then thin file, that's negative information, which currently, that's the most popular among our banking sector,
Okay,
among the lenders in the Philippines.
Right. Yeah, just to clarify the nomenclature here, a thick file. These are a file that composed of individuals that are already having a credit record, right? These are open trade accounts. While your thin file are typically understood to be those that are closed already, or it's just there because it was inquired upon. And of course, no file, new to credit. They're not in your bureau at all.
Yeah. Because I think what we are also trying to achieve in this discussion is how we can try to solve the issues among those underserved. So thank you, Marty. Let's go to Mr. JP Ellis.
Okay, thank you all, and it's such a pleasure to be here. I just flew from Indonesia, so I'm based there in Jakarta, and we had a big FinTech event there also on Monday and Tuesday, so just continuing the trend here. And it's remarkable as we go around the region, right? It's remarkable to see patterns forming. And I think throughout Southeast Asia, and particularly these really big, enormous markets with incredible potential over the coming decades, the Philippines, Indonesia, Myanmar, etc., right? I think the dialogue is absolutely where my colleagues have represented it as. It's about inclusion. It's about getting the no file, working them to become thin and then eventually thick, and then working with them, as the governor said, over the life cycle so that people are smarter and making better and more informed decisions and understand consequentiality. I think at the end of the day, we're all in the business of trust. data is just a way to prove that trust. You know, scoring and analytical procedures on top of that allow us to have a shared dialogue on what trust means. But ultimately, it's about trust. Now, in the Philippines, I think it's a really exciting place and time right now. And I'd like to just kind of take a brief moment to talk about eComparmo. So even though I'm based in Jakarta, I spend a lot of time here, but actually we've been in the Philippines since 2008. So prior to eComparmo, we were a technology company here called Think Tank Technology, basically corporation. And I know there's a lot of think tank people here, and I know you guys want to applause, but let's give it a, oh yeah, sure, why not? So yeah, my colleague Marlo mentioned about technology being the foundation. So, you know, we've been here now for 11 years, developing technology right here in the Philippines. And essentially with eComparmo and our equivalent kind of efforts in other markets, you know, these things evolve over time, and they start as, you know, websites and mobile apps where consumers can interact and, you know, find appropriate products. But you always get up, right, against the kind of barrier. And that barrier is that trust barrier. It's that data barrier. It's the no file, the thin file, the this, right? And so kind of how we see the markets developing is very much in terms of collaboration, right? We don't think that FinTech is similar to other, let's say, technology sectors, and Southeast Asia is becoming very kind of fast moving in terms of this. So you have unicorns being born, you have like really large, enormous e-commerce firms, ride-hailing firms, food delivery firms, and so on. And these particular business models are very much winner-take-all. And many of the business models have been informed by learnings from China, have been informed by learnings from India, obviously Western internet markets. But we don't think FinTech is like that. And we think FinTech is really about collaboration. Finance is never zero-sum. There's never a winner-take-all. I mean, to all the financial industry practitioners in the audience, I mean, the idea that there's a winner-take-all in the financial services industry is like comically laughable, right? So kind of FinTech has to develop and is developing in other markets around collaborative lines. And so what we think is obviously there's all the analytical procedures and data and sophisticated statistical AI and other techniques that my colleagues mentioned. But you know, all this is kind of a chicken and egg scenario if you don't have a way to go direct to the consumer. So in many other markets, we're seeing things, products like eComparmo and so on, being evolved and kind of enhanced to be able to work with all the other parties and give a path kind of going direct to the consumer. And I'm sure we'll talk about this later, but there's a lot of trends, right, in terms of the industry of scoring and financial inclusion. All these trends have to collide in harmony, and people need to work together. So there needs to be a forum. If somebody is, you know, no file, what's the path for them to start walking it up? So you get things like consumer contributed data, you get things like dispute and debt resolution. There needs to be products that go to the consumer that do that. And so eventually, at eComparmo, we view ourselves as a direct-to-consumer platform with a very, very strong Filipino DNA. Obviously, 11 years here developing technology, APIs, all sorts of stuff here. We view ourselves as basically someone in the industry who can go have those dialogues with consumers through technology, work with financial institution partners, and also work with all of our colleagues here to build a better, more inclusive financial outcome, you know, for 100 million people here. So that's how we view it.
Yeah, we have already more than 100 million people. And I'm also glad you mentioned that, JP, because, well, in the Philippines, we kind of associate FinTech with lenders, or pautang in layman's. They would call it, if you're a FinTech, or maybe you're extending loan, how can we ask or request for loan? So let's go to Simone of CRIF. CRIF has been a huge industry in European markets, but you guys are now also penetrating in the Asian market. So maybe you can explain and elaborate more on that, Simone.
Correct. So speaking about CRIF, actually one of the, let's say, advantage that we have is that we have a regional footprint. Apart from being active in Europe and US and the Middle East, in full Asia, all across Asia, Southeast Asia, and China, Hong Kong, Taiwan, India. So we start meeting more and more often regional player, regional banks, regional fintechs, even again e-compare more, where again my colleague was in Indonesia with JP just yesterday, and some of these players appreciate to have a regional API or a regional experience and a partner that can bring locally what is working, what is more important. So this is one of the aspects where we build on. The other aspect is being hyper-local. So we have been in the Philippines 5 years, 6 years already. We still do believe that the power of data is not fully expressed in the Philippines. For this reason, we have been working not only with the banks, but I mean, we proud ourselves to bring, the first experience in the microfinance. I mean, on the ground microfinance companies, not microfinance product, microfinance company, face-to-face, bringing analytics and scoring to those segments, for example. Or very famous brick-and-mortar finance company in the Philippines, to bring them to the power of using their experience and their data in doing more and doing better. On the other side, in the banks, even if we ask to any of the banks here, do you use score? Do you have score across all the segments? They will all say yes. But how relevant is that score to your business? How precise, how predictive? What are you using that score for? To manage the risk, to increment the profitability? So all of these questions are still, I guess, not fully answered, I would say. So there is a lot of space across all of the players here. And again, collaboration that has been one of the key words here. We act mostly as a distributor of data and of partner. On top of those, we try to help the lender get the best combination, cocktail of scores. So we work with the CAC data. We even work with the TransUnion data for some of our customers. We distribute, again, FISCore and other alternative partners. And in other setup, we work with lead generation portal, such e-compare more. It's really an ecosystem where there is, again, no perfect solution. If there was, it's maybe for a specific use case, but there's no perfect solution across all the possible use cases. So again, collaboration and again, transparency in collaboration is also one of the important keywords. Simply because having a consistent message to the consumer, it's important to educate the market. Again, education, it was also in the previous panel, it's a very, very important action that the government and all the players need to do to, again, to the public, to the borrower. There must be a very clear understanding that, borrowing money is not accepting a donation. The two are different. Sometimes it's not easy to distinguish because, again, being a disaster-hit country, the Philippines often receive also donation. So it's important. And again, when I see movie like the Shopaholic and so on, again, it's really part of basic financial education that all of us need to do more and better. I guess that on that we will also elaborate later on how we go direct to consumer with the fact the data are reliable, how the consumer can actually dispute those and so on.
You want to talk about direct to consumer in a while? Yeah. So maybe some of you are wondering why some of them, every time they talk, they make face. These are competitors, CIBI, TransUnion, and CRIF. So that explains why they make faces every time one of them talks about their product. So, but they're not enemies.
No, but,
this is
but,
collaboration,
but,
yeah.
Alex,
Because I saw you earlier, Marty, you were frowning, and
no,
so
not at all. Not
yeah,
at
but
all.
I
It's
think.
just a facial expression.
Yeah, but I think you, TransUnion and CRIF are really partners. Also, in terms of your other clients.
No, I think it's well, quite frankly, it's really refreshing. About the last 15 minutes,
Go,
be
we have
here,
time.
to be here, right? And I think to the point that I think JP likewise mentioned it, and someone mentioned it, and you were alluding to it. Collaboration is key. There's no one solution. And quite frankly, you guys, you also have your internal scorecards, and it's very common for me to actually, in the consultancy side, to develop joint odd matrices for a client. So you can actually leverage on the generic score and, leverage on your own internal score. And probably it's going to be another scorecard if you really want to sort of put them all together. There's no one solution. And I think what's really key for this country is to get the best minds together from a collaborative standpoint to make more possible, I think.
Yeah, and I think this is also a good opportunity, Marlo, for you to mention to them the direct-to-consumer, the product that CIBI is introducing, because CIBI has been in the market since the 80s, and we're not aging you, Marlo, but that's how they are familiar already with the Philippine market. And I think and I think that's also the reason why you're wearing barong this morning, Marlo. So. Yeah, maybe you can also share with them the good news that CIBI intends to launch in the market in the coming months.
What I'm wearing right now doesn't have anything to do with that on the first place. But yes, we found out that through a lot, I think the first is the word is collaboration. That was also the result of how we were able to look for alternative data, which we are about to launch towards the end of this year. We went through different partners. Through APIs, we found out that there's really no need for us to have one central data. What we only need is access to the different data and come up with a product. Now, we were very fortunate that we also have a very good data privacy officer that guides us through the whole thing. And through these APIs, we found out that there are, one, ways to validate information. Second is to acquire or have access to data in order for us to develop the right infrastructure that we can offer to the market. And third is that the educational piece at the same time, through the data partners where we have continuous API collaborations, also played an important role in understanding what's the need for them to give access to us. Everybody in the Philippines, not everybody, I guess I'm wrong there, but most of the people in the Philippines that has data doesn't want to share, simply because of the idea that somebody can steal my client or somebody can get my client out from me. That time has already passed. If you keep that mindset, the other institutions, especially the fintechs, will steal your clients. And it's better for you to have a 360-degree view of the market and understanding in order to give the best customer experience to your clients.
From a bureau perspective, Marlo is right. While there's that possible attitude of keeping data for oneself, thinking that I have to protect my data, that might be the road to perdition, right? In other words, that can cause you to lose your client. But from our experience, when we raise the dialogue towards trying to understand your client from a 360-degree perspective, because we have a sizable subscriber base, the client begins to realize that the off-us view is so important. The client begins to realize not only the risk, but the opportunity losses. Because if you don't have the off-us view, let's say the view where he's actually spending and doing elsewhere because we are a comprehensive bureau, you might lose the initiative, you might lose the client.
Yeah.
Yeah.
Okay. JP, you wanted to add something?
Yeah, absolutely. I think my colleagues here are absolutely right. I think what we see in a lot of really fast-moving fintech markets is an idea that it's actually not necessarily data itself being shared. Obviously, people are worried about using data for customer discovery and all that, but really insights or knowledge from that. And I believe our colleague from FinScore touched upon this earlier, but we see this in a lot of different markets now. So, for instance, really big e-commerce firms or ride-hailing firms, right, obviously are sitting on a lot of different insights. Now, some of those insights just taken by themselves might not be enough to inform like a very confident lending decision, right? But then you get to the point of saying, okay, how can somebody who is a data-rich custodian, I use the word custodian because actually the data belongs to the consumer. I'm sure we can touch on that later. But how do they basically be able to share that in a hashed, cryptographically secure way to allow others to make better decisions on that? So I think we need to have a discussion about how do we share insight and knowledge rather than just sharing data.
Yeah, it's really more for awareness and information. Quickly, you want to add more?
Yeah, just to sort of tee off from what JP said. Yeah, there are rules of engagement within a bureau operation where you're hashed. You wouldn't know the specific, let's say, lender or so. That's absolutely the way we operate, and that's, I think, the way all bureaus actually operate, right, JB?
Yeah.
So no worries on that. That's what we want to say, yeah.
Yeah, maybe just quickly we can tackle credit score. Maybe just for 2 minutes, quickly you can mention or discuss about credit score. Like how will it affect the consumers now? Because our topic revolves around solving puzzles.
It's all about the consumer, and let's say we want to talk about credit score. Credit score really is a numerical expression of the consumer's credit worthiness, right? It tells you the likelihood of this consumer defaulting within a period in time.
Yeah.
That's what it is, right? Very important in a credit score is there has to be some credit education that likewise needs to be. Financial literacy is very important.
Yeah.
And the channels by which you could actually get the credit score access is also very important. Yeah.
Simone, you want to
let me add and build on the score because, again, there's really a multitude of scores. Again, related to the use case that you have in your hand, related to the distribution channel, related to the credit product, and related to your target market. So I think that we all agree that the traditional score based on thick data, it's, again, the most predictive, the most precise in predicting the probability of default, but, again, on one side is not applicable to all the population, and on the other side, even the score, when we think about the consumer and say, oh, what is my score? The bank can actually decide to have different version of this thick score, depending, for example, if it's a secured product, an unsecured product, if it's distributed to a channel that has higher likelihood of fraud, like agents and so on. So there are still, even if the consumer might think it's one indicator of how good am I, actually is a multitude of indicators. And again, the example can be the one of school. You have several grades across the different subjects, and then you have one final grade. Okay, that can be a way to represent to the normal population. On the other side, there are again alternative scores. The advantage there is that they apply to a wider population. But again, being alternative, they are by definition less precise. And while we love alternative score, again, we do distribute alternative scores, they have a precise place. So we do believe that, again, for lenders and for banks, they still need to balance between their own internal score based on their thick file, external scores such as bureau scores, TransUnion, CRIF bureau scores, CIBI bureau scores, and alternative scores. So all of these still require some knowledge and experience that, again, the bank, the lender can develop together with, let's say, the expert in the
Maybe
market.
quickly about bureau score, Marlo, you might want to explain, because there's what we call the credit score and now the bureau score. So all of you guys are also looking forward to that bureau score. Marlo quickly can add.
The external scores that we develop, the bureau scores, is not the only basis by which a lender decides. It's always a collaboration or a combination of its internal information, of its internal score, of its internal understanding of the behavior of an individual or a borrower, plus the credit scores developed by the bureaus as a view for you to see the performance of this individual externally, outside of your bank or your lending institution. So it's not the only decision tool that will be considered, but a combination, a dual scoring model by which you consider your internal as well as external. Now, in terms of the different scores, I would compare it like its usage. It has its different use. It has its different data characteristic by which it is focused on that desired lending activity.
That's right.
Okay.
Yeah.
Go ahead, Mark.
Broadly
Just very
speaking,
quickly, because we're running out of time.
Yeah,
But I think we have time. We're not going
That's
anywhere.
right, yeah. So broadly speaking, you have a generic score from a bureau perspective. We provide a generic score. But you may likewise have your own custom score to take care of certain niches in your portfolio. As much Marlo was saying a while ago, it is common practice for us to actually put those two scores together so you can harness the power of the score. Very important in actually adopting a score is actually to conduct some retrospective data validation to find out whether that scoring model in question has got the power that is, good enough for your credit underwriting.
Okay.
So just a few things there, right? Yeah.
So if I were, just to segue, if I were a consumer and I want to apply for a loan, what would be your first advice so that to me as a consumer, if I had this, previous negative loans, hit list, or unpaid mortgages, what would be your first advice to me, Simone, wearing the hat of a
Should
bureau?
I say check on
maybe,
Iconpermo?
Grazie.
No, let me just,
Thank you.
exactly. So I guess, again, it's always better to know yourself, to know your stuff. So there are different lenders, again, even government lender. I mean, we have a project with the DTI that actually it's promoting distribution of funds that are government fund to micro-entrepreneur, and where again the expected risk, it's extremely high. But again, it's a government initiative, so it's still run as a lending program. But the government expects for this fund to produce a return that is not financial immediately, but is more, again, financial inclusion, education, and so on. So as a consumer, if I was the one, having no chance to get a loan from a traditional bank, before resolving to go again to the 5-6, check on the government. Check also the government side.
Okay. JP.
Yes, so we all have different fingerprints, right? We all have different personalities, and we all have different, needs and circumstances. So for somebody who's very event-driven, I guess I would go back and say, okay, in this particular situation, is somebody in urgent need, or are they more thinking and planning for the long term? Because obviously those are different things. But generally speaking, if somebody's saying, look, at one point in time, I want to buy a house for my family, I need a mortgage, and all of this sort of stuff that you do, right, in life. Generally, you'd be thinking about all the things that my fellow panelists mentioned, right, and stuff that the videos touched upon, right? So what is the options to me in the market? Now there's tools and websites and apps you can use to check. What am I actually eligible for, right? And you can check that with these gentlemen here, right? How does that correspond to the risk or lending appetite of financial institutions, right? Different institutions are comfortable with different geographic regions, different risk, different industries, and so on. So I think for the consumer, yeah, it's all about understanding that and really taking control. And I think, there's no silver bullets, there's no easy path, right? So if a consumer or financial institution is looking for a silver bullet, snap my fingers, and suddenly financial inclusion is achieved, or suddenly, we're running a very, very sophisticated fintech process, and this is a journey. And it starts, pretty much now, right? I think the Philippines is really much at the beginning point. And if we look at other markets like China, you look at other markets like India, I mean, even Indonesia now is a little bit there. So go look there and pattern match, and then you can really kind of peek into the future.
Okay, quickly, Marty, you still want to add something, or you've already given your points, Marlo? Okay, so I think we were able to summarize the discussion here that there are, 3 points that I have gathered. First is really there's no single solution in any given market, like what Simone and JP were saying. Even if these are same sectors, even if these are same industry, and then information awareness is very much important, or education. Like you have to educate the market. They have to know about this developments or about this technology, so that misconception will not, will be avoided. And I think also another point that we were able to address is that credit is a financial tool. It's very significant, right? And if we want to achieve all these developments in the Philippines, all of us have to collaborate and have to be partners, even if we are really competitors. You guys are competitors. So I think that wraps up our discussion. So we can, I hope all of you were also able to learn from our discussion, from our panelists this morning. So with that, let's move. Yeah, we're okay. So we'll have a photo op before you guys go down. Thank you.
All right.
Thank you, Attorney Ala, and our esteemed panelists for just letting us in on what it takes to create this sustainable financial ecosystem for the digital world. It's in fact one that can be trusted. I mean, trust is really important here. And one that can also bridge that digital divide, because that's something we still have to sort, and then build this enabling infrastructure that would help create access to money, because that's all what we're here for, to lend money to those who need the most, to the micro entrepreneurs. Now, before we head off for lunch, is everybody hungry? Give us a moment here, because we will have one more to dive into yet another solution for those in the midst of their own digital transformation journeys. So I'd like to call back one of the panelists that we just had, JP Ellis, the co-founder and group CEO of C88 Financial Technologies, Inc., for this presentation. JP?
Test. Oh, great. All right, thank you so much. Sorry for the slight delay. I was getting mic'd up there. Yeah, it's getting mic'd up. I'm good now. All right, thank you. So it's almost lunchtime, and I know the stomachs are rumbling. But before we do that, we're incredibly excited to try to draw a little bit of the circle close. So this morning, beginning with the governor, all the way to some awesome panels and industry best practices, we've seen a lot of really interesting stuff, and we're looking into the future on how we can achieve better outcomes for society, how we can achieve better outcomes for businesses, how we can also achieve better outcomes for consumers. So today, we're happy just to take a brief moment and really try to help solve this puzzle by showcasing and demoing a product that we call digital onboarding. So to go into this, basically at the moment, we all know the condition that we're currently facing. A lot of financial industry distribution and product sales are run on supply chains that include paper and PDF and telesales. Now, obviously, this was a necessary condition when the industry was growing over the past several decades. But we've had some watershed moments and a huge amount of changes in the way that millions of consumers, tens of millions of consumers, or in the region, hundreds and globally billions, interact with data. So all of these legacy distribution systems and sales systems obviously come with some features to them. Manual distribution chains generally have high costs of underwriting, high costs of acquisition, getting that customer, processing, taking maybe from paper, Excel, or PDF into the loan origination system or the card pack system. That's basically expensive, and it results in a really lengthy total turnaround time, as well as lacking some fundamental principles on data security. Now, this results obviously in a frustrating experience. And initially this headline said, it results in a frustrating experience for millions of consumers. But very late last night, no, perhaps early this morning, we looked at it and we said, look, that situation is of course frustrating to a consumer, to go through all the things that we've discussed, to go through these lengthy processes and eventually be rejected or not have a clue on where to start. But it's equally frustrating for the financial institution because you're getting those high costs, those lengthy turnaround times, all of that kind of detritus associated. Now, this is actually changing, and we talked about this a lot, but for the first time now, we can actually say definitively that consumers are leaving footprints. There's data everywhere, and as my colleague Marlo mentioned on the first panel, there's not a lack of data. In fact, there's a surplus of data. So the issue becomes really, how do we take all this data, and some of it might be analog, some of it might be digital, how do we make sense of it? So really, for the first time, the catalytic change moment is the idea that consumers are leaving a lot of data. There's footprints, and we can take those footprints to make better decisions. Obviously, this is spurred by the reality of the Philippines. And I don't have to tell you because I can look out and see everybody's on their phones. I am too. But we are probably the most digitally fluent or digitally native societies on the planet. So when you go through the different statistics, and we all know these, they're startling. Manila is the capital city of Facebook. How many billions of Viber and WhatsApp messages are sent every day? This is no longer a question mark moment. And for those of you like me who've been in the industry long enough, you know that several years ago we were still having question marks around this. Will consumers shop online? Question mark. Will consumers flag a car or a motorbike online? Will they do this online? Will they do that online? And I think obviously the statistics show that we are beyond those question marks. We are definitively in a reality where that sort of consumer behavior is happening. Now, what we see in advanced credit economies, so the United States, Australia, the United Kingdom, obviously, but also in emerging credit economies also. So think Brazil, think India, think South Africa, Colombia, Mozambique, and increasingly now Indonesia. What we're seeing is digital onboarding families of products basically stepping in to bridge that gap and to solve a lot of those fundamental questions around costs, around data, and around efficiency. So this also has the added effect of giving more relevancy to the consumer, right? If you're doing all of these activities online, as we just said, and in the comfort of your smartphone, I like that word, in the comfort of your smartphone, because it's very comfortable to us. It's the first thing you probably pick up in the morning. Hopefully you kiss your children first. Come on, admit it. How many people pick up their smartphones and check email and messages before kissing your kids in the morning? Just joking. I wouldn't raise my hand. But what we're seeing is Again, in advanced credit economies, but also emerging credit economies, solutions coming in place now to do this and take advantage of all the change that's happening in the market to have better outcomes for the business, for consumers, and for society. So I'd like to take a moment to introduce the eComparemo digital onboarding canvas. So lots of digital onboarding solutions in the market. And I think the best way to think about these is as a canvas. So what you have is obviously a sequence of steps associated with originating, underwriting, processing, dispersing, and other associated activities that you run in the day-to-day course of the business. Now, we can have all these different Lego blocks or Pez candies. I'm not sure if we have that here. You can have all these different features that go in. And my team here took me out to eat at a Turo Turo restaurant. I hope I got that right. And this is the same concept. So you're looking at something, and if you like it, you point to it, and you get it. So on the previous panel, we talked about how do we become more sophisticated, how do we move forward. And I think one thing I wanted to mention there, but I saved it for now, is to move away from the concept of an origination path or a distribution path as a single sequence of steps. And instead think about it like the New York or London subway system. There's a lot of ways to get to Times Square. There's a lot of ways to get to Trafalgar Square. You can take the train that's red, you can take the train that's orange, you can take the train that's blue, and so on. So arranging these pieces, you can come up with deterministic narratives. So if a customer is thick file, you can do it a certain way. If a customer is thin file, you can add in obviously more things. And if a customer is no file, obviously you're going to want most of the Turo Turo dishes because you're going to need as much validation and comfort. Obviously, there's risk-adjusted outcomes, there's individualized outcomes, and this is incredible for the consumer and allows us to be much more thoughtful about the way that we're doing things. So digital onboarding, couple quick things. Hopefully they stick in. So you have a faster turnaround time. You can go from a processing time being weeks or days down to hours and potentially minutes, particularly if that customer already has a file or if they're a return customer. You obviously have more customization, better experiences. You can offer narratives to the consumers that are more in line with their expectations, risk-based pricing, all the increased security that is associated with this, rights management, hashing, and so on, resulting in lower costs and increased sales. So enough of the theory, let's see it in action. So today we're going to have a product showcase. I'm going to be joined by my colleague Anne Yosuiko from eComparemo. Please come on up, Anne. And up here we have practical applications of a digital onboarding canvas. And you see 3 different possibilities. Of course, there's many, many possibilities. These are Lego blocks after all. We can configure them in different ways. You have credit card issuing, excuse me, retail financing, marketplaces, and so on. So Anne, I think the audience is so excited to hear what you have to share.
Yeah, I'm actually more excited than anybody here because we've been working on the retail payment plans section for a very long time. JP, I'm going to have to borrow the clicker for a sec, but yes. Okay, so let's focus a bit on the middle, right? This is the retail payment plans use case. And what you're seeing here is what we call first the product eligibility step, which is really, these words come from partners who've discussed this. This is actually our secret sauce, right? Our partners' risk acceptance criteria that we put in our catalog and allow us to then walk the customer through a series of questions, and so they can determine which product they're eligible for. And then from that point, make a selection and move into what actually the pricing and offer can be. So when we're talking about pricing and offer, this is actually one of the areas, JP, that we're very excited to be working with Experian on, because the strategy manager is one of the world's leading solutions on decisioning and credit risk analysis and the ability to actually determine, what types of pricing, what types of terms, what types of duration we can offer a customer based on the eligibility that they already gave us, right?
Absolutely. Absolutely, Anne. That's a really good point, because as we go from a step-by-step sequence into more, decision trees and so on, that needs to be underpinned by pretty powerful software also. So you need to construct these narratives, right?
Another step that we really want to focus on, this has been brought up in many different ways, but every step related to an application, every request for information, there are so many different types of forms. Every partner has their own combination of information that they want to be able to ask the customer for. And we already are able to do that in these services, but really to focus more a bit on, the question of how much data do we really need so that we can start to use some of these alternative data sources that our partners are starting to talk about. What is the bare minimum that we can then put in these forms, although, it's there for thin file or no file customers regardless, right? You have customer information, employment information, financial behavior, if you want to ask that from the customer.
So Anne, are you saying that if we want to experiment with different sorts of credit models, a variety of alternative data, you can plug it in here and then test those out?
Yes, and what you're seeing here right now is actually the full set of information that most of our partners request. But what we'd like to be able to demonstrate for you as we move through the types of retail payment plans or even your own verticals that we're starting to talk to you about is really which of these can we start to do away with? What are the types of information that we already have that you can use, and then the ones that you'd like to experiment with? So while this is already there, there's so much more to work with.
So as we deploy that digital onboarding, we're getting all this data. How can we streamline the consumer experience?
Yes, that's really the fun part, right? How do we get the customer, or how do we ask less of the customer so that they can have a better experience? So this step that you're seeing is document uploading. And a lot of the time, our leaders, they try to remind us, Chris in particular, our Chief Commercial Officer, how this process should not simply be a replica of the manual process, putting it in a digital environment, right? There has to be, while we ask for these, database checks that we start to implement. And this rollout is already the start of that, right? We have databases in the background, ID OCR, all of those great, high-tech, jazzy things that everybody's looking for. But at the end of the day, it's really about the database validations that we're looking at in this.
So if we wanted to get various documents, OCR those, and then do some KYC or eKYC, that possibility exists?
Yes, it's already there.
Already there.
Any payment plan also needs to talk about the variety of payment options that we're already experiencing in the Philippines, right? Regardless of which payment platform or partner you're already working with, you want to be able to have that choice of the combination that you offer your customer. So for example, if we're talking about down payments for a retail plan in combination with a financing option, you want to be able to give the customer the option to choose.
What if I have a preferred payment method? Could I make that available by an API here?
Yes, actually interoperability is the key. I mean, I love that whole discussion the whole day. We collaborate very closely with so many of the people who you see here today. That's why they're here, actually. And so if you have any preferred option, preferred technology partner, preferred service in mind, an experiment you want to run, that's actually why we're here. The vision of our leadership team is really collaboration towards enabling the essential financial infrastructure in our country. So whatever you guys want to try, connecting to any of the existing platforms, that's where we want to be too.
Fantastic. Let's see the underwriting step. I'm really excited.
We like to call this the last manual frontier because very much connected to the decisioning section. This is where we make the counter offers, we validate the submitted documents, and everybody, regardless of partner, regardless how advanced, even the fintechs, they're still reviewing the customer, right? And that, while that is a very interesting thing and it's supported, you can re-edit the offer, you can check for the approval, then you can refer it. The point really is, we have all the tools for automated decisioning. So how do we get to that state? Because we can do all of the manual revisions here and provide the counter offer, which is what the customer looks for, but at the end, all of that can also be automated.
Okay, so in other words, I can offer to my consumers something very sleek, something very intuitive, something that's very fintech, and it can go quick. But if I want to have the comfort of an underwriter looking at something on the back end and physically, manually citing that and checking that, I can have that flexibility also.
Yes.
All right.
Second to the last step, because everybody was also talking about both the compliance and the legal environment that we're in and how careful we are, because a lot of the responsibility resides with the institutions. So we've developed so many types of legal documents that we require our customers to read through and accept and all of those things. So the functionality to go through all of those documents and e-sign them and submit them and make sure that they're provided to the customer as well as something that they can revert to later on, as well as the partner, is all there, right? The next phase, which we'd love to be...
So can we customize that also?
Exactly.
Okay.
Or make do without it, depending on for example, our Bank of Makati friends were asking, what are the types of e-judicial processes that can come into play that, these kinds of agreements can start to then have a RegTech version of their own. Right?
Ah, very good, very good. Okay, what's next, Dan?
Last is fulfillment. And in the step of fulfillment, while this is the retail payment plan option, you have to also consider that this applies to disbursements, your branch-based or your store-based processes for release. And so in this particular step, you see the release of a phone, and that one, is fully supported already. But you can consider this also to be the step where, your staff or your customer will also need to check whether or not they've been fulfilled in that sense. So that functionality is there too.
Wow, so we've just bought a phone, have we?
Yes, we have, actually. And what's most exciting about all of this is really how we're powering the customer experience, right? So imagine that your digitally native, primarily millennial audience is looking to upgrade their phone, and what they really want to be able to do, because they expect it in all of their experiences, is to go through this very, very quickly, right? So what happens is they're jumping through hoops, but they want to know very quickly, am I validated, right?
Okay, a pretty important thing if I'm going to get credit, so
Yes.
can I be validated?
And so, all of the services are there, and you get to, speed through that particular
So we can
challenge.
validate them and OCR them on to the
Yes.
next one?
And then on to the next challenge, which is making sure I'm qualified for whatever service or product I'm looking for.
Okay.
And then from that point on, we're going into making sure that I get the right type of decision for my credit category.
Over the pit of fire?
And then with that decision, basically, I will already know, what my final state is, and then going through that challenge, be able to meet my goal, which is the value proposition of all of our services, get the customer what they need as quickly as possible, and unbox my beautiful new phone.
Wow, so that was a whole game-like process. So the millennial, the consumers, the digitally native consumers, we can position the digital onboarding family of products as a sequence of challenges they need to overcome to meet,
Yes,
their goal?
because that's already the experience that they have on most of the platforms that they're using. So we have to be aware of what our customers are already expecting as we move into the new generations of customers that we start to service.
Wow, that's really, really, really exciting. So we've heard from Anne here, and we've heard from the entire team, and we're so excited about the digital onboarding family. This is, again, a customizable canvas. We can present these game-like challenges to our consumers with if-then logic in an almost infinite, customizable journey depending on each individual's outcome.
Yeah, so we're very excited to continue to be working with our partners who are here, who have already signified interest in their verticals and in the digital onboarding suite, and the next generation, which is related to retail financing. So if you guys have any questions and want to see the live demo, our team is actually here, ready to demonstrate anytime.
Very good, thank you. And I'd like to thank you all. I probably would like to invite the MC back on, and yeah, thank you very much for all of your time this morning.
Can come off the stage, JP, thank you so much. And you were right, by the way, Carinderia, no, Turo Turo Restaurant. That's correct, JP, but if you want to be hardcore about it, it's Carinderia. But we're not going to have a Carinderia lunch. And obviously, we're in a beautiful hotel, but lunch is going to be served. And be back by about 1 p.m., where we will have more of these deep dives, and I'll be moderating a third discussion, this time with the regulators and the ongoing high-impact projects to the financial industry. So for now, bon appetit! Be back at 1:15 p.m. Thank you very much.
So ayun, this was my first photo. Mukhang amateur, pero proud ako dyan. Hindi naman sa pagmamayabang, pero phone lang gamit ko na. After college, napilitan ako mag-telemarketing. Pays well naman. Brutal nga lang yung hours. Taking portraits for me is special. Gusto ko man gawin siya professionally. Kailangan ko ng tools din. Kaya slowly nag-iipon ako para sa camera body. Pero mahal talaga. Di pa kasama yung lenses doon. Sa paningin ng bangko, yung pagiging telemarketer is not a stable job. So madalas yung loans ko talaga is nade-decline. No? May mga bills na kailangan bayaran para sa pamilya, and dreams have to wait talaga siguro.
My friends say I'm compulsive na daw. Sometimes when I see a new bag, I just have to have it. I try to get loans as well, kasi limited edition na by the time ma-afford ko. Maaga ko na nabibili, pero panibagong problema naman. Almost na doble ang binabayaran ko sa interest. Madali kong nakahiram, pero ang hirap bayaran.
Binuksan po namin yung store 1989. Sumapat naman po sa aming mag-asawa. Napagtapos nga po namin si Junior at si May. Kilala po kami dito dati. Basta sabihin nyo lang po yung pangalang Aling Hedy at Mang Dado. Gusto ko nga pong nagbabantay ng tindahan dati kasi maraming nakakakwentuhan. Kasi po, simula nung nagbukas yung mall sa labasan, konti na lang yung dumadaan. Naisip po namin mag-expand ba. Nag-try po kaming lumapit sa bangko para sa karagdagan na kapital. Pero hindi daw po sapat yung kita namin eh. Hindi naman nawawala ng pag-asa. Baka sakali pa rin may tumanggap na iba.